Are we staring down the barrel of a housing market crash or a gradual correction? Today's analysis dives deep into Zillow's downgraded housing forecast and Redfin's market update, revealing conflicting trends and expert insights. Home prices are at record highs, yet pending sales are plummeting. Stay tuned for predictions on mortgage rates, inventory levels, and whether a recession is on the horizon. Don't miss out on this crucial financial update. Hit that like button and subscribe to stay in the know. Today, on Real Estate in Review, we will summarize the following videos. From BiggerPockets, we have Zillow housing market forecast downgraded after slow spring season. From Jason Walter, we have July 2024 Redfin housing market update. From Real Estate Mindset, we have unemployment jumps, mortgage rates plummet. Hello, and welcome to the BiggerPockets network. Our host, Dave Meyer, is catching up with Dr. Skylar Olson from Zillow's economic research team. They're diving deep into the ups and downs of this year's spring buying season, home prices, inventory levels, and much more. Expect loads of insights, a sprinkle of predictions, and maybe even a crystal ball at some point. This video analyzes the 2023 spring buying season's performance and its impact on the housing market, detailing the causes behind Zillow's downgraded housing market forecast. It further explores how inventory levels, mortgage rates, and life events influence the real estate landscape and what we can expect going forward into 2025. Here are the key points discussed by Dr. Skylar Olson. Spring buying season. Spring buying season typically peaks during April and May. This year saw an additional slowdown due to mortgage rates hovering near 7%. Pre-pandemic, May would see over 1 million listings versus only 400,000 this year. Inventory and listings. Inventory levels have been affected by high mortgage rates, causing current homeowners to hold on to their low rates. From the pre-pandemic months, we're 23% down on inventory, with a slight improvement from last year's 36% down. Market trends. Price cuts are becoming more common, with homes spending more time on the market. Buyers who were active last year will notice the market loosening up slightly. Mortgage rates and effects. Elevated mortgage rates around 6 to 7% are likely to continue pushing towards more inventory as sellers adjust their expectations. A potential drop in rates could see an increase in both buyers and sellers, with a possible stabilization in prices. Dr. Skylar Olson made the following predictions. Housing market prices. Zillow forecasts a mild 1.4% decline in home prices over the next year. Any significant market correction would likely require extreme economic stress, such as a recession. Interest rates and economic impact. Mortgage rates are predicted to stay around 6.6% over the next year. Even if rates dip, the balance between returning buyers and sellers could mean prices remain stable. The overall assessment is that while inventory is expected to increase gradually, the market remains tight. Elevated mortgage rates are the central force driving current trends. Zillow's forecast shows slight price drops, indicating a slow move towards market stabilization. The key takeaway? Stay informed and be tactical. Use tools to keep track of affordability and stay nimble as interest rates and market conditions change. See you next time on BiggerPockets. Hey folks, welcome back to the Jason Walter channel. Today, Jason dives into Redfin's latest housing market update, covering everything from record-breaking home prices to the surprising dip in pending sales. Our unbiased host, Jason, is ready to break down all the juicy details for you. The core thesis of Jason's latest video is an examination of the conflicting trends in the current housing market. Record high home prices paired with declining pending sales. Despite a few slivers of good news for buyers, like a slight dip in monthly payments and increased listings, the overall market is experiencing significant challenges. Is it a sign of a market crash? Not necessarily, but it does indicate a tough landscape for home buyers and sellers alike. Here are the key points discussed by no guest mentioned. Assume Jason Walter is the speaker. All-time record high home prices. U.S. home sales prices have hit a new all-time record high, which is one of the reasons pending sales are down by 5%. The biggest price increases are seen in Anaheim, California, New York, and New Jersey. Pending home sales decline. Pending home sales posted their biggest decrease since February, falling by 4.6% in the 4 weeks ending June 30th. Key markets like West Palm Beach, Houston, Atlanta, and Miami saw the largest declines. interest rates, and housing affordability. Despite slight decreases in mortgage rates, the average monthly housing payment is still significantly higher compared to 3 or 4 years ago, up by over $1,000. The average 30-year fixed mortgage rate sits around 7.08% as of early July. Leading indicators and market trends. Mortgage applications are down 12% year over year, and Google searches for homes for sale have dropped by 20% year over year. Redfin's Homebuyer Demand Index has decreased by 17.7% year over year. Inventory levels. New listings are up by nearly 10%, contributing to an 18% year-over-year increase in active listings. Homeowners are still reluctant to sell due to tight affordability and elevated rates, keeping listing levels historically low. No guest mentioned. Assume Jason Walter is the speaker. Made the following predictions. Continued inventory increase. If new listings continue to rise, this could lead to increased inventory, causing downward pressure on home prices. The month supply is expected to rise for the remainder of the year, aligning with historical trends. Slowdown in home price growth. With increasing inventory and a rise in price drops, home price growth is likely to slow down in the coming months. Current sale-to-list price ratios and price reduction trends signal a cooling in the market. Jason wraps up by highlighting the complexities of the current housing market. While home prices are at record highs, pending sales and buyer demand are on the decline. He emphasizes the importance of staying informed and keeping an eye on leading indicators like mortgage rates and inventory levels. If you're interested in diving deeper into the data, don't forget to hit that like button and subscribe for more updates. Welcome back to Real Estate Mindset, where today we're diving into some sizzling market insights with our host, Eric Nelson. In this episode, we're unpacking some major movements in the unemployment rate and mortgage interest rates and their impact on the real estate market. In today's video, Eric Nelson breaks down how recent jumps in unemployment and plummeting mortgage rates are acting as harbingers for a potential recession. He connects the dots between rising unemployment, decreasing mortgage rates, and housing market trends, while also offering some practical financial advice for current and prospective homeowners. Here are the key points discussed by Eric Nelson. Current market movements. Unemployment has risen to 4.1%, creating significant market turbulence. Decreasing mortgage rates, specifically a recent drop in the 10-year Treasury yield by 6 basis points. Eric highlights how increased unemployment typically leads to falling mortgage rates, and this current movement is no exception. Mortgage insights and tips. Emphasis on the importance of shopping around for mortgage rates. Generally, brokers offer better deals than direct lenders. FHA loans typically offer the lowest interest rates. However, the only major advantage of conventional loans is the possibility for mortgage insurance to fall off once sufficient equity is built. Amortization schedules. Paying down principal early can save significant amounts on interest. Trends in the housing market. Current mortgage rates are hovering around 7%, with some trends showing potential decreases, but these are still high compared to historical norms. The bifurcation of market trends. While some areas are showing an inventory increase and decreasing prices, others are experiencing the opposite. Key regions like Texas and Florida show significant differences in inventory growth, driven by varying local market conditions. Challenges for renters. Despite slight decreases in market rents in some areas, renting remains historically expensive. Growth in construction of multifamily units in areas like Austin is helping to alleviate some rental pressure, but other regions like Cleveland and Chicago lag behind. Eric Nelson made the following predictions. Increased inventory levels. If mortgage rates drop further due to rising unemployment, more homeowners may choose to sell, increasing inventory levels. Recession indicators. The trajectory of rising unemployment implies that a recession is on the horizon, as historical data shows that increasing unemployment rates reliably predict economic downturns. Eric wraps up by cautioning viewers to remain vigilant in the current economic climate. He underscores the importance of being informed and prepared, whether you're buying, selling, or renting a home. And don't forget, mortgage shopping isn't one size fits all. Doing your homework can save you a ton in the long run. Doing your due diligence today can save you from financial headaches tomorrow. In this video, Dr. Skylar Olson from Zillow highlights the current high mortgage rates and their impact on inventory and prices. Jason Walter from Redfin provides a contrasting view with record high home prices and declining pending sales. Both experts agree on the market's complexity and the influence of mortgage rates on buyer behavior. However, they diverge on future price trends. Zillow foresees a mild decline, while Redfin suggests a potential cooling. Stay nimble, keep track of affordable options, and always do your homework when navigating these market waters. Remember to like this video and subscribe for more insightful updates. Thanks for watching Real Estate in Review for July 5th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.